that's going to be with us today. I promise you, I was going to start getting everybody involved, getting ready to start having guests on the show. Today is no different. We are loaded. We're going to be talking about real estate. We're going to talk about credit. We're going to talk about insurance. That's one of the hottest topics that we're talking about today. If you turn on the news, interest rates was going up. You also turned on the news. We all heard about the hurricane that happened in Florida. So I thought it was important to talk about the homeowners that are in Florida that are insured. So we got the number one real estate in the city, Lamont Perry, with State Farms, hands down, the number one guy here in the city. He's also went to my college. That also helps a whole lot. But Lamont Perry is going to be speaking to us from Allstate. And we also have a realtor. And we're going to be talking about as the housing market is going up, we're going to have her come in and she's going to tell us what we need to do in order to get out of the rat race, get into financial literacy, and get over the hump of home ownership. There's a lot of questions I'm sure that we got to ask tonight. So without any further ado, we're going to start off. Kelly, could you tell us a little bit about yourself and what you do and how you do it? You gave me the whole lowdown earlier, but kind of let me know what do you do?
Well, it's just become my passion to educate not only my community, but everyone about financial literacy and home ownership, and that we can all be a part of this. It's not only where you live, but it's the start of building generational wealth. So I take it very, very seriously. So one home at a time, one property at a time, I want to educate each and every one of you.
All right. So Lamont, kind of let us know a little bit about you. You're alone. You're of the opposite fraternity, but we all in the same fraternity. You know, she's even an AKA. So we got the whole fraternity.
Make sure you say that.
So he's a Kappa. He also went to Indiana State with me. Always been a very sound, down to earth person. I'm so glad that he reached out and we kind of talked. And he said, hey, we got to hook up. We got to link up. So I use this as an opportunity. This is the first show that we're using with talking about Let's Talk Real Estate and Credit. Lamont, kind of tell us a little bit about you, man.
So thank you first and foremost for Cepeda for allowing me to be on the show today. It's not often that you have you can reach back 20, 30 years and someone still remember your character and what you stood for, and will invite you in to come on shows. I get a lot of invites, but a lot of times it's just people that have kind of known me in the professional world. So I do appreciate that. And I do have to correct you on two things. It's State Farm.
Oh, my goodness. I know you weren't going to let it slide. I know you weren't going to let it slide.
It's State Farm, so it's red and white, like Cap Emphasize. So just always remember that.
You got
red
to
and
throw
white
it in there.
as well. So, but like I said, thank you for allowing me to be on the show today. And I'm glad to be on this show with the young lady as well. I've actually seen her name around before. So definitely keep up the good work that you're doing as well. Background, you've already given some of it. I'm a native of Indianapolis, Indiana, Broadville High School here locally, Indiana State University there in Terre Haute, where Cepeda and I, like I said, we were in different fraternities, but of course family and friends. And I tell people, no matter what fraternity, sorority you're in, we're all still of the same family. Once we go there and once we leave there, we even become more of a big family in this big society and world now. So definitely here again, gracious for you inviting us on. So 27 years it'd be 28 years in the insurance industry as of this year, 16 years with State Farm, and I did coming on 12 years total with life insurance company. So as you know, life insurance has become my passion over the 28 years of helping to create, like she said, generational wealth. Home ownership, as she will tell you, is one of the best ways to create generational wealth. And then also by buying life insurance, protecting that home first and foremost, because it's going to be required because you have a mortgage. If you've invested your money into a home, you want to protect it rather whatever cause comes up. But life insurance will help you build that generational wealth tax-free.
All right. So, ladies and gentlemen, I want to start this off. If you want to tag somebody, send it out, StreamYard it, share it. We want to make sure that because we're going to answer a lot of the questions tonight that have plagued our community. We're going to answer some home ownership questions tonight on what you can do to get into a home. Like I said, I always say this: the cavalry is not coming. The creek is rose and the levee is giving way. It's up to us to save us. We got to get in the game. We got to understand that we have to start to educate ourselves. We must begin to surround ourselves with people who are knowledgeable in the business. The first question, we're going to start off with Kelly. Kelly, tell me this. What is everybody's saying that there's a shortage of homes.
Okay.
What is that all about? Break it down. Tell us what is that all about? When they say it's a shortage of homes, people can't get a house. Is that what is it?
It's how the market moves. Right now, there are more buyers than there are sellers. You'll see the market move each way throughout the years. Sometimes it'll be a
Okay.
buyer's market, sometimes it'll be a seller's market, sometimes it'll balance out. So yes, there are not enough homes for people that need to buy them, which drives the sellers to run the market.
Okay.
Now
So
it has
so
calmed down some. So I don't mean to say that to scare anybody off. There are enough homes out here for you to buy. It's time to just get started and get yourself in position. But we are definitely in a seller's market.
okay. So when they say a seller's market and a buyer's market, kind of
Hmm.
a lot of us don't understand what that means. What does that mean? A seller's market and a buyer's market.
Well, that means who controls the power at this point. You see what I'm saying? If there was a plethora of houses, let's say the housing crash of 2008, there were so many homes for sale. Everything crashed, and so it was time to jump in and buy at that point. There were way more buyers than there were sellers. You understand what I'm saying? So then that
Mhm.
drives supply and demand, drives your costs.
Okay.
So it's just simply what it is. So when
So
there are
we're
more
really
people
just
selling,
doing So we're really just dealing in supply and demand. There's a demand for these
right,
houses, so the price goes up, right?
right, right,
As the demand goes up, the interest rates goes up. There's supposed to be more houses on the market, right?
right, right.
So that's why the prices of these houses are going up. So that brings me to the next question, Lamont. When these prices go up and you're already in a house, should we be calling our insurance agent to get more dwelling coverage?
So most definitely, as we've seen, the value of homes are definitely increasing by quite a bit over the years. So if you had your homeowner's insurance for 2 years, 5 years, 10 years plus, you should be calling your agent to say, hey, am I insured enough? Because if my house burns down, is the replacement cost that I started off with 20 years ago, is that enough to replace my home now? So I wouldn't want to be in the position of saying, okay, yeah, my house 300,000, 500,000, but now
Mhm.
due to the increase in price of labor, wood, steel,
Yeah.
materials, cement, that I'm not going to be able to build a whole 100% of my house. The only thing I could buy is replace it 75%. So
Okay.
definitely
So
very important to contact your agent. And I always, with me being with State Farm and other companies, I always say you should just you should revisit your agent once a year. Now you could do it by phone, you could do it by Zoom or however, but you want to do an annual checkup just as if you're going to the dentist or doctor. Maybe there's nothing wrong, but you want to have that preventive maintenance. So you should definitely be reaching out to your agent or some
wow.
agent.
So did you guys catch what he said? Did you catch what he said? He said that when you guys are buying your home, you guys definitely should be revisiting the real estate. I mean, your insurance agent, as the housing market has increased. We all know that it has because Kelly just said the demand for houses is high. The supply of houses are low. And so when that happens, the prices of your home, if you are a seller, you're in the market, yeah, hey, you're going to get top dollar. But Lamont just gave us some good sound advice so we don't enter the rat race. Is as your value of your home goes up, you need to call Lamont and say, hey, Lamont, I need to increase my homeowner's insurance. What type of insurance? I know I refer to it as dwelling. What does that mean if you don't know what it means? Can you kind of explain that to us, Lamont?
So typically when they're speaking of dwelling, that means the building that you're living in, the building that you have your rental property in, the building itself. That's the dwelling. If it's an office building, it's the building itself. And just to kind of even give a little more on that, dwelling extension means like a detached garage, shed, mini barn, privacy fence. But generally, when you see dwelling or coverage A, that's pertaining to your house when it comes to homes.
Okay, so Kelly,
Yes.
another question that was just asked. I'm ready to start throwing you guys some questions. That's why you guys are here. So when you're taking out a client, what are some of the things that you see that the client needs to have when they start to look for a home?
Well, first and foremost, the your lender and your realtor are best friends. You need both of us. Have to have a great relationship with both of us. And so the first thing I try to get everybody to understand once they decide that they want me to be their realtor, that we need to link you up with the proper lender so that you can know how much house you can afford. Because we want to shop within your price range. That way, we're not looking for $500,000 homes and you qualify for 350. Because then, when it comes time to, I love this house. So that's the first thing we want to do is make sure that we're operating at a proper price point that's gonna not only fit what you can afford, but your actual budget. Because sometimes we're pre-approved for more than we want to actually spend. So you want to kind of get everything that they need. What do you need in this house? What is it for? How many bedrooms, bathrooms, square footage? What do you want to do with it? Is it an investment property? Do you plan on living here for a long time? So that I can make sure that I get you what you need.
Okay. Now, do you require talk about the pre-approval letter? That's the elephant in the room. What is the pre-approval letter? What does that consist of? What do you like to see? Because I've seen some realtors say, hey, I don't like that pre-approval letter that you got. So what type of pre-approval letter should they be looking for that realtors want to see?
Um, I want to see all the information from the lender. I've never had a pre-approval letter that I didn't like, so I'm not sure what
Okay,
all the
so what happened? I'm a national loan officer by trade, and so what they're looking for with because me and Kelly will have to work together. Me and Kelly looking for a house. We going to be buying a house, so they want to verify all of the assets, bank account, checking account, how much money you have to bring to the closing, your job, 401k. All those are personal questions. Mainly, what they're looking for is to make sure you can afford the house that you're looking for, right? Then we'll call Lamont and we'll get Lamont on the phone, and Lamont will say, okay, what house are you guys trying to buy? He'll give us a quote for the insurance. It's not a policy, correct, Lamont? I think you went out on me, Lamont.
I'm sorry. Yes, we're going to start off with a quote. You're going to do an estimate of how much it will cost to replace the home. So if the home is a $300,000 home, that doesn't mean that you're necessarily going to insure it right at $300,000. We want to insure it so that in the event that inflation increases like it did over these last few years, that you're still going to be able to rebuild that home. And of course, the mortgage company or lender, this price, some of you will probably say later, they want to make sure that when you're insuring that they're going to be able to get paid in the event that house catches a fire and you decide to say, hey, I'm moving out of state. I'm not gonna do this, do that. They want to make sure that they're going to get paid. So we're ensuring that everybody's investment is protected, not only the lender, but most importantly, the buyer.
Okay, so me and Kelly, we're going to make sure that we communicate. Sometimes the mortgage company can help you get insurance. Sometimes the real estate agent can help you get insurance. I think I'm having some feedback from somebody. So then we also have to get with the realtor and she's going to make an offer on the house, right? Kelly, can you kind of tell me what some of the things that you would like to see when an offer is being made realistically? Because I know we probably have some people that want to stay in a Mercedes Benz, but they can only afford a Pinto. But should the expectations be set?
Well, that goes back to what I was saying about getting pre-approved first, because we won't be at the Mercedes-Benz lot if we don't need to be, right? So we're gonna get that pre-approval first. That way we're shopping everything that we're about to offer on. Anything that we see here is something that the client can afford. Okay. So when we come in with our offer, we want to put our best foot forward. Any negotiations or anything that needs to happen, we always want to put our best foot forward. So what can my client do, and what still makes sense to offer, offer the seller. So that's from the seller's point of view. So I try to educate them on property value, why this house is listed for this much. Comps are a big part of my business. I like to show my clients what their house, what other things in the neighborhood sold for, and what kind of market they're moving into, so they can
Okay.
have their resale value as well as soon as they move in. Some people are coming in quick, leaving out quick. You never know what people's plans are or things that happen. So I want them to get a snapshot of exactly what it looks like now.
Okay.
Um,
Okay. So as we begin to go, so the first thing we got to do is the realtor will bring you in, or if you don't already have a realtor, uh, we're gonna highly recommend Kylie. We're gonna highly recommend Miss Evans, and we're gonna highly recommend Miss Evans. I'm not gonna send you no place else. Then the second thing you got to do is come to me, come to Cepeda, and I'm gonna get you pre-approved. Okay. When we get you pre-approved, now you got to go back to Mrs. Evans, right? And she's going to say, okay, let's start looking with this pre-approval. Now you might want to steak and filet mignon, but she's going to get you with some, as we used to say, red beans and rice. Okay. She's going to get
it'll
something
feel
she,
like steak. It's gonna feel like steak. It's gonna be your
yeah,
new
it's going to feel
home.
like steak. Yeah,
It's gonna be
filet mignon.
wonderful.
Get it at home. But so the next step is you're gonna get your pre-approval. You're gonna go start going house shopping, and that's the most fun time because that's the honeymoon. You're starting to look now. When you start to get turned down, don't get upset. Just know that there's more houses out there on the market that you're going to be able to find, right? Stick to it. We will eventually get you into the house that you want to be in, right? Now, it might not be everything, but it will be what you want to be in. Set realistic expectations, right? So once the home is, y'all have agreed. Now, one of the things that people say, now I'm just going to ask this. Did y'all ever talk to the other realtor and then y'all come together and say, hey, we're going to charge a little bit more so we can get a little bit higher pay? Do y'all ever do that?
Absolutely not.
Oh,
I,
okay,
I,
because
I've never.
it just seems like I'm just breaking down the myths because it seems like when somebody is applying for a house, it seems like that realtor comes back. You better give me your best and best offer because if you don't, somebody gonna beat you out, and then they'll say somebody beat you out because you didn't give your best and best offer, highest and
I mean,
best.
your best is got to be your best. You don't know what somebody else is going to come with. So if your best still doesn't get it done, your best still doesn't get it done. You still want to be within your comfort zone of what you can
Okay.
afford. Don't do something that you can't afford, trying to make sure that you get the house. Make sure that you can still afford that mortgage. So, yes, you do want to put your best foot forward, but that's definitely not something that I'm
Okay.
telling
Well, the
any other
elephant
person trying to get
what a
more
lot of
money.
people
No.
say. It just seems like that when people be trying to say, "Hey, I'm ready to get a house," and then you get into a bidding war, and then next thing you know, you're upside down. So she said
Well,
that's not true.
Well, that's the wonderful thing about owning property, real estate. Real estate is a wonderful thing to own because look at all these people that are making money on their homes. They bought their houses in this period of time, and now this period of time it's worth a lot more. So that's how you get into bidding wars because now that home that you purchased 10 years ago is worth so much more, and people are coming at you with the value of your home. So that's why I tell
Ah,
people it's such a beautiful thing to own real estate, because now you have leverage to do other things.
well,
You want a
did you
bigger
catch?
home, now you can sell
Did you
them.
catch what she said, ladies and gentlemen? Real estate gives you leverage. The cavalry is not coming. The creek has rose. The levee has given way. It's up to you to save you. She just told you a real estate that's been in the business. She said leverage and real estate is hand in hand. Now, once you get your leverage right, I'm going to come back and I'm going to ask Lamont a question. What are some of the tools that insurance people that you can offer to help us keep our leverage in place?
Okay, so when you say tools to keep your leverage in place, with homeowners, is that where you're going with that? A homeowner's policy is basically going to, here again, assure the bank that their investment is protected, rather it be a fire at your house, someone left a candle burning, arson, that's not someone in the house, the furnace blew up, the lightning struck your house and caused a fire, burglary. Someone decides that they don't want to go to work every day and they want to come steal what you earned, what you worked hard to earn. You covered for that. It's going to cover for hailstorms. We have quite a few hailstorms here in Indiana, so hail damage is covered. Hurricanes. When you mentioned hurricanes that's occurring now, hurricanes is going to cover in Hawaii. There's a lot of people that are homeless now because maybe they did not have the correct homeowners insurance or they didn't have renters insurance. So now they're homeless or they don't have clothes to put on their back. So that's what homeowners insurance is going to do. A lot of times we don't think of homeowners insurance when it comes to liability as well. So if I've got a couple dogs and the dogs decide to bite someone or someone was bothering my dogs and the dogs jumped over the fence and bit someone, and now they have medical bills of $100,000 $1 million, my homeowners insurance can actually pay for that. So I don't have to pay for it out of my pocket. My homeowners insurance pays for it. Earthquake, and I wrote down a few things. Earthquake, if you have a basketball court, all the kids come to your house for the basketball court, swimming pool, trampoline, and the kids happen to hurt themselves, and it was because of your fault for whatever reason. That homeowners insurance liability protection can protect that as well. So a lot of things.
Hold on. I don't want them to glance over that, Lamont.
Okay.
Did you catch what he just said? When you are buying a home, okay, you need to understand that liability is on there too. Dwelling is on there. All of those things is incorporated in your home when you're going through that home buying process. Me and Mrs. Evans, we're going to get you the lowest rate. I'm going to get you the lowest rate possible. She's going to get you the lowest price on the house possible. And guess what's going to happen? You're going to come out and you're going to move into that home. And most of us, when we get ready to start buying our house, the first thing we're going to go get? We're going to go get some new furniture. Okay.
Yeah.
So make sure that you have enough coverage to get when you buy your home. Yes, well, I'm buy you some new furniture. Me and Kelly will probably get you a gift, but we know that you're going out and you're gonna go get you a couch. You're gonna go out and get your pictures. You're gonna go out and get your rugs and all of that stuff.
Big screen TV.
You gotta get the big screen. You gotta be able to watch it from the next room.
Right.
Sound. So we want to make sure that you are in the best possible position when you purchase your home, so that we don't have to come back and say, "Hey, I had a person that came up to me. We bought the house, and I was so happy for him. And about 2 years later, I saw him in the store and he went the other way. And I was like, and I saw him on my way out. I was like, hey, how you doing? She was like, I was so embarrassed. I was like, what are you embarrassed about? She said, I don't have a home no more. And I said, what happened? She said, it got taken and foreclosed. I was overextended. And so I was like, make sure. And she was like, the taxes went up, the insurance went up, and I just couldn't afford it. And I felt bad, but I also warned her, hey, listen, this is gonna be tight but we don't know when the jobs are going to change and things of that nature. Kelly, do you run into that a lot where people want more than what they can actually buy? Do you run into that a lot?
Every day. Every
Hey,
day. And one of the hardest things is letting someone shop there because we all have to figure our way out into this market and coming in as a real estate agent or insurance agent or whatever. You try to be there for everybody. Sometimes like I was telling you earlier, it can get personal, but you what they want. So you working your best to get what they want. Or sometimes what I've done is make mistakes and not and shown houses without pre-approvals, which is why I drive it home. Because now you're shopping in what you think that you can afford instead of doing your actual numbers. And then I have to break it to you. We can't have that. But I can find you a wonderful home within your price range. And so, yes, people will want more than what they have. But if you can show them what they can get for their money, then they'll be just as happy.
okay. So one of the things that we want to do is the cavalry. Once again, the cavalry is not coming, ladies and gentlemen. The creek is rose, the levee is giving way. It's up to us to save us. One, when you're looking for a home, make sure that you add the insurance price in there also. That is huge because when you start adding value to your home, Lamont has told us that you got to increase that insurance policy to cover all those beautiful things that you have in your home, right? So that's very important. Um, Mrs. Evans, let me. I'm going to give some bullets to you and Lamont, like boom, 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 because I got a couple of them that I can see.
Right quick, Cepeda, right quick on that last note that you said. And I always tell people, don't be so afraid that when you increase the dwelling coverage on your home, that it's going to be going up $1,000 a year. Sometimes it may go up $10 a year or $20 a year. But when you divide that up by 12 months, I mean, you're looking at $8 a month, $20 a month, or whatever it may be. So don't be so afraid to say, oh, no, I'm not going to call my agent because I know my rates are going to go up. Because you want to say, hey, if I can only pay $8 or $20 more, you're going to give me $50 or $100,000 more to put in this hardwood floor, to put in the same type of roof, to put in this nice 3-inch drywall, or to replace that big screen TV. You want to do that because it's still only pennies on the dollars on what you're paying into it compared to what you're going to have out as far as a payout in the event that something happens.
Oh, okay. So did y'all catch what Lamont said? He said, when you are getting that house, don't be afraid to talk to your real estate, I mean, to your insurance agent, because it might not be as bad as what you think, right? Now, what was you going to say?
I just wanted to add to all of this and to let everybody know that we are a team. You need the lender, you need your insurance agent. Being personal, I almost lost both my parents in a fire. Probably it was about a year and a half ago. And we always think it's not going to happen to us. It's not going to happen to our family. So it's all necessary. Everything that we're talking about here is necessary. Don't be afraid of insurance. Don't be afraid of lenders. And don't be afraid of realtors. We're all here to help you.
Okay, so one of the things that we all are here, we all are passionate about, we're here to help. One of the things that me and Lamont was talking about before the show, we was talking about a life insurance policy in case somebody passes away and you pay off the house. What type of products is those? Are any type of products that are out there like that, Lamont?
Okay, so yeah, definitely, life insurance is very important and key when it comes to helping to create generational wealth. So if you're using your home as a way to create generational wealth, because now you're, as she said earlier, you're buying land. There's only so much land on in the world. There's only so much land in the United States. So that's a value, that's an asset that we all should have at some point or be working towards. So if you have that asset and you say, okay, if I pass away, I've got this $100,000 loan, I've got a $500,000 loan, $1 million loan, whatever it may be. If I pass away, I don't want my family to lose this asset that I worked 10 years, 20 years to get my credit in position, or I first came, I went to college, or I worked hard overtime on my job to get. I want to say, hey, you know what? I'm passing this generational wealth on not only to my kids, but my grandkids. And by doing life insurance, whether you do a whole life insurance policy or you do a term life insurance policy, those policies can pay off the home right away. Once you've proven the death, then the insurance company is going to look at it and say, okay, we need a death certificate, possible cause of death, depending on how long it is before the person passed away from when they originally bought the policy as well. But here again, paying $20, $100 a month, whatever it may be, to pay off this $100,000, $300,000 to $500,000 home. You can't prevent death, and we all have a time of death at some point, and we're going to pass. So if you're within that 15 to 30 year mortgage time, it's smart to have a life insurance policy specifically to say, this is gonna be paid off. My wife, my husband can still live here if I die. They no longer have my income. My kids can move here. My kids can turn this into a income down the line. If they don't want to live here, they can rent it out. They can Airbnb it. They can sell it 10, 20 years later and double their money or triple their money as well. So highly important to always think about when I'm buying this house, I'm buying this $80,000 car on a 7-year loan like they're doing now, is to buy life insurance, pay pennies on the dollars for the life insurance to have that item paid off.
Wow. So once again, if you're trying to sell your house, what are some of the benefits going on right now today, Kelly, if you was trying to sell your house? Because when I talk to Kelly, I'm gonna be frank right now. Kelly told me she do both. She said I work with investors and I also work with people that's trying to sell. I'm a one-stop shop. So
One stop shop. Come on over here.
hey, so if y'all are looking to sell your house, this is the market. The interest rates are creeping up a little bit, but people are still out here buying. Am I right, Kelly?
Absolutely, because there are so many programs out here that people don't know about. So don't just look at stuff and say, "Oh, I'm not in a position." Call me, ask me. Let's talk about your options. Let's talk about the programs that are out there that you may not know about. Let's talk about how ready you might actually be. And if you're not ready, then we can help you to get ready. So yes, it's a great time to sell. Obviously, if you want to upgrade.
All right, so this is a great time to sell. We got a question. Now, Tammy is an underwriter, but she said the question is, it says raising the dwelling doesn't help when homeowners and insurance companies only pay replacement costs. Is that correct? So if we live in a $50,000 house, but the rebuild is $150,000, homeowners insurance only pays $150K, correct? Is that correct?
Right. They're only going. So insurance is designed to put you back into the position where you were before the incident happened. So you do want replacement costs as well, because you don't want it to have it at a cost of what it costs to replace your home 5 years ago. If your roof gets totally destroyed, the only thing you want to do is pay your deductible. You do not want to have a copay. So replacement costs, insurance companies are going to let you come and say, well, your taxes wise, your value of your house is $250,000. Selling your house is $280,000. They're not going to let you come in and put a tag on and say, I want to insure my house for $500,000. They're still going to only allow you to insure it at replacement value. But with State Farm, we can insure over the replacement value. In the replacement, they have basically a built-in for inflation as well. So like this past year or so, whenever we were at a 9% inflation rate, those policies were still protected because they had a built-in inflation rate. And with a lot of companies, such as State Farm, we have a certain amount of inflation built in every year. So if you buy your home this year and then you're buying it at $250,000 or whatever the dollar amount is, come next year, it's going to be increased. Your premium here again may or may not increase that much, but your dwelling coverage is going to increase because, as we know, land, homes are assets. They help create generational wealth. So you want the value of your home going up. You don't want to. Grandma paid $7,000 for her house 50 years ago. We don't want them to pay us $7,000 because we know $7,000. We probably can't go out here and go get a used car to sleep in. So you want that replacement value. You want your dwelling coverage to increase every year with inflation, because you don't want to get stuck. And insurance companies say, well, you insured the house for 100,000, and they write you a check for 100,000. You take it to the contractor. Contractors laugh at you, say, hey, I can build your garage, I can build a family room, but the kitchen, the bedrooms, the bathrooms, nah, we can't do that. Or you go from a 3-bedroom to a studio because you didn't take in consideration that dwelling increase.
Okay, so Kelly, when you're showing these houses, right? Let's talk about are people buying houses now as an investment compared to 4 to 5 years ago? Are they getting into that market?
Well, investors are my jam. I love my investors. So yes, absolutely. I see it. And Indiana is a wonderful place to invest. I mean, think about it. It's a great place to live. So you're going to have a lot of investors coming from different places as well, not just here. So yes, I see a lot of people investing in properties in Indiana. I work with them a lot personally myself.
Okay. So let's switch this a little bit to credit, right? So Lamont, do insurance companies pull credit when they're trying to insure a client?
Yes, that is something that I want to say most insurance do consider now is your credit. It's a combination of a lot of different factors, but credit is one of them. Some companies, they look at credit more so than the others. And most people ask, well, why do insurance company consider credit? In my opinion, from what my research, they're considering credit now because that shows responsibility. Sometimes that shows that your ability to pay, your ability that you are consistent with paying your bills. Um, so most people don't like it, but it's a benefit because the mortgage companies are looking at that and say, hey, you know what? We're going to loan you this money. We're going to trust you with this money because you've shown that you could be trusted, that you could save money, that you pay your bills on time. So insurance companies, they're taking on that risk. So the same thing with them. They're saying we're going to take on the risk. We want the ones that we can be most confident in as well.
So we got a question for Mrs. Evans. What is the best way to document home improvements made to your home or rental property in the event of fire? That's a good one. I don't know the answer to that one.
Well, I think that's more of a question. When you say that's more of a question for you, Lamont, because I
I
think
mean,
that's like
What's the best way to
for
document it?
insurance.
to your home and a rental property in the event of a fire. So yeah, I would say there is no best way. So with State Farm, no, I'm just saying there's all different. I say do all of them. That's why I say there's no best way. You want to be able to keep your receipts. Most insurance companies don't require it, but keep all your receipts. Uh, Document when you're purchasing items. So if you're purchasing high dollar items, document that. If you had your roof redone, keep your documentation as well. If you had your floors done, keep your documentations. It used to be where people would say, hey, well, I'm going to do a video of all my items that I purchased in my home, and I'm going to keep them in the safety deposit box. So you can keep them there as well.
Well,
But
I
for
think
me,
the best. I
be
think
honest.
also,
Just be
yeah, I
honest.
think also one of the best ways to do it from a mortgage standpoint is one, go get a credit card that is prepaid and swipe that credit card so you have an itemized or create an account specifically for your house so you will have an itemized items that you purchase that's very user friendly for you to see. And then when you submit it for taxes or you submit it to your realtor to show, hey, my value of my house went up for this reason, or you have giving it to your insurance agent, you'll have it itemized right there in front of you. The worst thing you can do is to one say, hey, I did it and guess at it. Make sure that you have documentation. Go get a credit card They have prepaid credit cards, or you can go open up a checking account, put it in, use that card, put the money in there, use that card to swipe it. A roofing, go to Lowe's, a flooring, whatever it is, just make sure that you document it. So that when you get in contact with Mrs. Evans and she looks at the comps in your area and she's saying, hey, I don't see nothing in your area that's sold for $150,000. And then you can say, well, I did these improvements and my square footage might be a little bit similar or upgraded than what's in there. That brings me to a next question. Does square footage matter?
Talking to
For
me?
both.
Yes. Hey, now
You can go first.
tell me how does square footage matter when you're looking to purchase a house or you're looking to sell your house? How does that
Well,
matter?
obviously you have more living space and you have
Okay.
more land. Um, it's more. Anything that's usually bigger costs more money. It's going to be more that you can do with it. Your kitchen is going to be bigger. Your bedrooms are going to be bigger. They're going to be more space in your yard. Maybe you have a pool. Maybe you know what I'm saying? With more square footage comes more possibilities. So that's why it's going to be more money.
Okay. So when you're looking to buy a house, I know when I was looking to buy my first house, one of the things that my realtor told me, she said, I built it from ground up. And she said, Cepeda, go and have them build it on each side of your house 1 foot. And
Extension.
I was like, 1 foot. She said, yeah. She said, in the front, come out a foot, back, go out a foot, on the sides, go out a foot. Well, I didn't understand at the time because I was buying my house way back in the day, but it added a lot of value because the people who was in my subdivision, guess what? They had a cookie cut house, but mine was 4 feet bigger on each little area. So square footage is important, especially when you're trying to build a house. Tell me this, Mrs. Evans, what type of builder should we be looking for?
Um,
What's the difference between building a house and getting one already built? So is there a big difference there? Or is it based on preference?
I would say that that's based on preference. I've had people that I've been trying to get into an existing home go into new builds, and I've had new builds go into existing homes. It's all about what you're looking for. Some people just want the experience of building a home and picking everything out. They just want to experience that, but you can get the same things in an existing home. So it's really preference, if you ask me. And then the home is new, which is gonna be new to you. So that could be a preference of some people. I've seen with existing homes, sometimes you get more because it's already there. So you can kind of see what's already there as opposed to putting all those things in your brand new may cost you more at that time.
So
So it's really preference and what they're looking for.
tell me this, Mrs. Evans. A lot of people say, "Hey, I can sell my house on my own." What is some of the benefits of having a realtor? Let's
So
get that
many
pink out of
benefits.
huh?
I'm glad you asked me that question. I just got off the phone with a what we call FSBO for sale by owner today. And they come up with all the reasons why they need to sell their homes themselves, but they don't realize all the implications that go along with that. They don't realize that there's insurance that goes along with that. Someone could come in your house and fall. Someone could come in your house and now there's nobody here validating these people. As a licensed real estate agent, I have to validate who's coming in and out of your house. I actually have to record that. There's all kinds of methods and measures that go into that. Also, your paperwork, legal documents, title, all those things that you don't know what to do. We can have predators coming out of the woodwork preying on you because you don't know the process. And this home that you've had for however many years and you've built all this equity in, you could lose to somebody that is a scammer. So there's so many things, checks and balances that go into selling or buying your home, especially selling your home without a realtor. And you really can still get your money, and you will probably make more money on your home when you use a professional agent.
Okay.
And
So
also on that, Cepeda, and I was a realtor for a number of years as well. So when the realtors go to school and they take that state exam, the state requires them to know a certain amount of information. So you're paying for their experience, you're paying for their knowledge, you're paying for their time. So every time she goes out and show you a different house, or you drive by a dream house and she has to look it up, you're paying for her time, not just at the closing, but all the times that you called her in the middle of the night, all the houses that she's shown you, or she had to connect with other people. So there's a lot that's come into play with that. And I always tell people, like, you think of that percentage that you're giving, especially as a seller, you should quickly go ahead and volunteer, because that's a lot of work as well compared to what you're going to earn. And even with the buyer, compared to what you're going to gain throughout the years on this asset, you're going to look back and you're like, man, I took all that time to try to sell and made pennies on the dollar. And I always tell people, if you're a professional car salesman, you're a professional shoe salesman, you're a talk show host, that doesn't mean that you know insurance. That doesn't mean that you know real estate. You don't know how to fix on cars just because you're a doctor. So stick with what you're good at and let the realtor or the other professional stick at what they're good at.
that's it. So I always say there's good loan officers and there's bad loan officers. There's good realtors and there's bad realtors. There's good insurance agents and there's bad insurance agents. And that's what I was telling Mrs. Evans today. Make sure that you get with somebody who fits your personality. Okay, that's going to work with you. And remember, Calvary's not coming, ladies and gentlemen. The creek is rose, the levee is giving way. It's up to you to save you. So you need to develop a relationship with that realtor, with that loan officer, with that insurance agent, because these are the people that's on your team. We have a couple of more questions here. We got, as an investor, I require my tenants to provide renters insurance. Should I have them add me as the additional insured, and how would it protect me?
So I would definitely highly suggest being added as additional insured. And most apartment complexes and landlords are doing that now, because that way they're protected. So just say if uh, the someone breaks into the house, tears the house up, or there's a fire, if only the tenant is listed, then the landlord cannot file a claim. But if you're listed as additional insured, it's almost as if you were paying it yourself. So insurance company is going to allow you to come back and file a claim as well, even
Did
though
y'all
you're
catch
not the
that?
one paying
Did
it.
y'all catch that? Because
So,
he's giving you, like, if you want to become an investor, and make sure that your name is on that insurance policy, because that will save a lot of headache. If when we're doing the mortgage, we don't care who's on insurance, but when it's time to pay out, if there's some damage done to the house, that you're concerned. If that roof goes off, you want to make sure that you didn't get Brother Donut down the street to do it when you should have got a professional to do it that's not going to have any holes in it. You don't want it. You don't want your house to be messed up, especially if you're using it as an investment. Am I right saying that, Lamont?
Yes, and then also as a additional insured, just like a mortgage company, they're going to be notified if the person decides not to pay that renter's insurance. So if I don't pay my renter's insurance and I have my landlord as additional insured, the landlord is going to get notified. Hey, Mr. Jones, Mr. Perry didn't pay his renter's insurance, and it's canceled. So then you will call your client or your tenant and say, hey, you know what? Uh, I see that your insurance wasn't paid. You need to get some more, or I'm going to force place insurance on it, just like a mortgage company will do, just like a vehicle insurance. They're going to force place their own insurance to protect their asset, and they're
Yeah.
going to charge you 3 or 4 times more for it. So
So when Mrs. Evans tell you as an investor, and you have all these grandeur ideas about becoming an investor and how you're going to make all this money, and she says, "Hey, make sure that you're on this insurance." That is a tool that she's trying to help you. Once again, this show is to enlighten you, to make you know, to make you understand what's going on in the real estate industry and in the insurance. People might ask you, why did you bring an insurance agent on here with a realtor? They might ask that question. Valid question. I've seen too many houses that people come into as an investor and as their primary resident, and they end up being upside down because they don't have the proper insurance involved. And then, as me and Mrs. Evans have seen many a times, I'm sure she has, that insurance lapse, and you think that you done sold it, and you got termites. Guess what happens? You can't sell it, or you got to disclose it to the buyer. And guess what? Your house, you can't sell it for the price that you want. That hurts, don't it? I seen that.
Yeah, that happened. That happened to me. And one of my sellers was the worst thing I've ever seen in my life.
So that those type of things happen. So one of the ways that you can protect yourself, and we're not trying to give you a get rich quick scheme. Take the time to talk to your real estate agent. She's going to tell you about an inspection, right? Most of the time, you advise your clients to get an inspection. What does that normally entail? That's what I might bring on my show in a couple of weeks, an inspector.
I tell everyone to get an inspector, whether you are buying or selling, for the simple fact that you want to know exactly what condition the home is in. If you are a seller, you want to know what you're listing. So you want to know exactly what's going on with the home. You don't want any surprises when that buyer comes in and says, I want this fixed, this fixed, this fixed, and this fixed. This gives you an opportunity to address those things prior to putting that house on the market. So you're confident when those offers come in that your house is in the best condition. As a buyer, you don't want to take on too many things that are not within your price range. Like you may get this house for this amount of money, but it needs $75,000 worth of repairs that you couldn't see with your eye. You don't know everything that's going on with this house and this foundation, irrigation system. You need to get all those things checked to make sure that you're not taking on issues that you're not prepared for.
Now, when you get ready to sell it and you didn't know some of those things, Lamont, is there any insurance policies that can say, hey, I didn't know that it had termites, or I didn't know that it had steel pipes? Is there any coverage in the insurance piece?
Certain policies have additional options that you could take on. Like we have a coverage like a service line coverage. So this is something at least we started offering a couple of years ago, where in your house and under your house, your insurance company is generally going to pay for frozen pipes, broken pipes with certain situations. But from outside of your house to the street or to the sidewalk, you're responsible for that. And most people don't realize that when you see someone's yard individually being dug up, they may be paying $10,000 for that dig up themselves, because they may still have old clay piping in old houses. The neighborhood may not be updated, the sewer system. There's trees. I mean, Indiana is farmland, and of course, there's a lot of trees that may have been here 50 years, 100 years ago. So tree roots could destroy the piping in your yard. So
Wow.
therefore, you need service line coverage as well. And then, of course, once it picks up at the sidewalk or the street, the city picks it up. But there's different options that come with homeowners insurance that you want to make sure that your agent is explaining all that, all those options. I know a lot of times we're trying to get the cheapest thing out the gate, but you want to make sure that you're properly protected. And sometimes paying a few dollars more helps you, give you a sense of security that if something happens, I'm protected. When it's storming outside, we're trying to make sure that our livelihood, our sales are protected, but we're also thinking about our house. And we don't have homeowners insurance, like you're praying to God, please don't let that lightning strike this way. Please let the hail take a different direction. Please let that burglary, when I'm on vacation, timing and going live, that everybody know I'm in Jamaica, Hawaii. Please don't let somebody break in my house because I'm on live. while I'm gone.
Mhm.
So
Okay. So once again, ladies and gentlemen, this is a lot of information. I've posted Lamont Perry's number down there. If you are in the market of looking for insurance, please give him a call. If you are trying to set up some things to make sure that it's passed on from one generation to the next, please give Lamont a call. I'm getting ready to put Mrs. Evans' name down there. If you are in the market of looking for a house, or you're in the market of selling your house, or if you are in the market of saying, hey, I want to take my 401k, I want to start buying and flipping houses, give her a call. She specializes in that. That's what she does. So you can't go wrong. When you get ready time, when you go out there and you use your 401k, you purchase it, guess what? Now it's time for you to come back and see me, right? And when you come and see me, I'm going to help you get your money back that you invested into your house, put somebody in there that's rent, get your money back, make sure that it's insured, okay, in case something tears up. In case they tear it up, you got some insurance out there, okay? Your tenant, make them have rental insurance, okay? But for the most part, call Kelly. She's got houses. She works with investors. She knows the market. She knows where the hot spots are at. And guess what? She might have a couple of nuggets for you. So make sure that you get with the realtor, get with Kelly. I'm not going to say get with the realtor, get with Kelly so that she can take care of you. So when you get ready to purchase your home, you're set, you're ready to go. If you are a first time homeowner, once again, give Kelly a call so she can walk you step by step through the process. She's going to walk you through the real estate process. I'm going to walk you through the mortgage process, and Lamont is going to get you the insurance when you get ready to go to the closing to make sure that if something happens, that you don't lose. Okay, this is going to be a one-stop shop. This is what we have to start dialoguing about when we start talking about home ownership, when we start talking about mortgages, and when we start talking about insurance. We talked about the interest rate. We talked about your credit, how it can affect your insurance. Guess what? If your credit is horrible, and guess what happened? Your policy might be a little bit higher, and then Kelly got to come back and tell you that $200,000 house has to go down to 175. And guess what happens? You kind of get irritated, but if you are prepared and you understand those things, now you can make an educated decision. And that's what we want to do. We want to start our people making educated decisions about financial literacy, and we understand now how important it is, like Kelly was saying. You got to get into home ownership now. It is a must. You got to start paying attention. The cavalry's not coming. The creek is rolled. The levee is giving way. It's up to us to save us. We're going to end this. Kelly, did you have one last thing that you want the public to know? Thank you for coming. Thank you, thank you, thank you, thank you, thank you, thank you, thank you.
Thank you for having me. I really appreciate it. Like Lamont said, I really appreciate you having me and asking me to be a part of this. Like I said, I'm very passionate about this, especially in our communities, that we need to own some stuff. We don't need to just keep renting and throw our money away, and see what the power of real estate and financial literacy really is. But I would say that don't be scared to ask questions. Stop just thinking that you Googled something or you seen something online and that's the end all be all. Contact your professionals. Information is free. You do not know what you don't know. And I'm here to help.
You can't do any better if you don't know. Kelly is here to help you. If you're looking to buy a house or get involved in home ownership, you got to call her. I would rather for you guys to start early than late. Interest rates aren't going nowhere. I don't care what nobody told you. They're not going nowhere. Guess what? Call Kelly now before interest rates get out of the control. At one time, I remember when interest rates was 11.99. So, hey, They're not that yet. Lamont.
So once again, thank you for having me on the show this evening. And Kelly, it's been a pleasure as well that you shared your knowledge on real estate as well. So every time I talk with someone on a panel with someone, I try to learn myself as well. So thank you for what you're doing towards educating, providing knowledge as well. And what I'll do is just leave a nugget as far as life insurance. So homeowners insurance, if you have a mortgage, is required. Life insurance is not required when it comes to the state, the federal. No one requires life insurance. But if you love someone, you should have life insurance. Some people call it love insurance. So if I have kids, I have a spouse, I have parents, I have someone that's disabled and they depend on me, I should have life insurance to make sure that they're going to be taken care of once I leave here. So we can't be selfish and say let the state bury us. We've got to say, well, we got to leave money to take care of those funerals because cremation, funerals, whatever you're doing, whatever your final requests are, it's got to be paid for now. And I did heard of a recent story, but spoke with people in the past that they also could use the death benefit, the tax-free death benefit that you receive someone in life insurance to buy that huge house.
Yeah.
That's on for education for your kids and your grandkids. And even with whole life insurance and dividends, people have used those dividends and cash value from their policies that they paid on to buy a house, to buy investment property. So kind of think about that. That's what has been done for years and years. The Rockefellers built their legacy and money, and you could Google this, off of whole life insurance. And so it's not going to be the cheapest, not going to be as cheap as term starting out, but in the end, it's I always tell people it's basically like it's something that you could come back and borrow against. And I don't have to walk into a bank or somewhere and they say, Lamont, you got on a nice black suit. You got an 800 credit score. They get
Blue suit.
blue suit, into all those. So they can still tell me no. Hopefully they won't. But also with your whole life insurance, you could call me or call your agent and say, hey, you know what? How much cash value do I have in there? And they can say, hey, you got XYZ. You say, send me a check, deposit a check into on my card, into my account. No matter what your color, race, creed, credit, height, weight, they can't tell you no. It's your money. So keep that in mind.
Well, like I said, well said. Once again, as we came out of COVID, I'm sure that we know somebody that we lost during the COVID. Somebody that you know, it hit all of us,
Yeah.
right?
Right.
And I can only think if we had life insurance policies, the generational wealth, it wouldn't be a gap right now. It would be more of we have more wealth out here in the streets for us because we took the biggest hit during COVID. So, once again, ladies and gentlemen, financial literacy is the way to get to where you want to go. If you are trying to buy a house, call Kelly. All seriousness, call Kelly. She is passionate about helping you. She's going to take care of you. Guess what? I always tell people if you're on my show, and we help you out. If they don't live up to what they say, please call us back. And I'm sure we'll bring Kelly on here, or we'll bring Lamont on here.
We're
And
here.
y'all gonna hold me to the fire. So we want to be a platform to where people can come onto the show. And I got this concept from Soul Train. Soul Train, if you know anything in the inner city, everybody watched Soul Train. All the actors went on Soul Train before they became big, right? Or all the actors went into Paramount before they came big. So that was your way of proving yourself. So we want to be the show where you come here first. So when I make that call, Lamont, can you come on my show? Lamont can't tell me no because then I'll say, well, guess what Lamont Perry said? Or Kelly, when I make that call, Kelly can't get too busy where she can't answer my calls, right? So we want to hold each other accountable. We want to make financial literacy fun. we want to make sure that when I see Lamont Perry with the wraparound and say State Farm, I remember I saw that dude on the show, and you go over and do some business with him. Or if you see Kelly and she got a mega platform, she said, I'm an influencer. So I was like, okay. So I was like, make sure that y'all reaching out to them. So this is how we talk on the show, because I want people to utilize y'all. And the reason why we don't talk financial literacy, because we're embarrassed and we don't talk and we don't make it fun. So we want to make it fun. I try to make sure that, all the questions are answered. I know that a lot of times you might not want to answer the question on here. You got their number now. Go back, look at it, share it. Don't be selfish. Once again, thank you, thank you, thank you for coming on the show. I got them at a short notice, and they both was very helpful to me. Thank you for coming on the show. Next week, we're going to spend the whole show talking about credit and credit education. What does your credit score mean? And so a lot of us are working on our credit. We have Credit Karma. We have all of these different sites out there. We even got some scammers out there that's getting people's money, and they're not doing what they said they can do. Can stuff be deleted from your credit and it never comes back? How do you do it? And if so, what does that mean? Some people say they got good credit, Lamont, but I don't know what it means. I got a 700 score. Is that considered good credit? We don't know. I guarantee you, Mrs. Evans, she gonna tell you if you got a 700 score, that's gonna get you this, this, and this. But I'm gonna tell you what the banks think. So next week, be ready, be dialed in. We're gonna talk credit next week. Once again, thank you for coming on the show. Once again, I always say the Calvary is not coming. The creek is rose, the levee is giving way. It's up to you to save you. If you want to learn how to bet on yourself, tune in tomorrow at 6:00 to where we're going to be talking about how you can bet on yourself. Till next time, keep your mind on what you are trying to do. Keep betting on yourself, ladies and gentlemen. Bye-bye.
Thank you. Goodbye.
Thank you.